are reasons why the tax policy feels so broken and feels so unfair. It's because it is. You're all getting screwed out there. This is broken on purpose. It's intentionally complicated on purpose. Some of the best minds of our generation are spending their entire lives as accountants in Deloitte and PricewaterhouseCoopers and these enormous accounting firms, not doing constructive damn work that's actually furthering any industry in a way that makes sense. They're navigating a 70,000-page tax code for their entire careers. Because we made the tax code so complicated. This is stupid on a federal level. This is stupid on a US level. And the reason it's allowed to be so stupid is because it is so complicated. It's broken. It is being used as a weapon because people don't understand it. So the purpose right here is at least let's start communicating on how it's functioning and how broken it is so that we can not have it weaponized against everyone because they don't have time to understand it. Good morning. The number for today is 6,800. That is how many pages is in the federal tax code. However, when you factor in all the court cases, all the IRS guidance, all the challenges and regulations, that number balloons to over 70,000 pages. But it all comes back to this. This is the US progressive tax system, and it was a good intention to which the entire US is on a road to hell with. The progressive tax in the USA is a good idea, but when you slap 70,000 pages of regulations and loopholes, it is broken, I propose, beyond reason. The problem is no normal person has the time to go through it. No normal person even really understands it. And the reason I know this is because for my decade adjacent to financial advice and retirement planning, well, I was talking about $300 million kind of every day. In my decade, the first question out of my mouth after I got to know the client a little bit was, hey, how well do you understand the progressive tax? And this glazed look would come over their eyes. And so I would say, or would like a 4 or 5 minute review help? And they would always say yes. A 4 or 5 minute review would definitely help. And so we would go through and just talk about the progressive tax. And every time they're like, man, I never understood this. The people I was sitting down with, honestly, were average net worth of $1.5 million to $15 million. And they didn't understand the progressive tax because no one understands the progressive tax. The problem is, as a country, we do not understand the way we are taxed. We have a bunch of misconceptions. And in this series of videos, I'm going to try to walk you guys through some of the biggest problems with that and how it is so broken that GE can get away with filing a 50,000 page tax return, or Amazon, off a profit of $5.6 billion, can get away with paying zero in federal income tax. In 2024, the Center of Americans for Tax Fairness did a study, and they reported that between 55 major companies, there was $70 billion of pre-tax revenue reported, and only 6.9% paid in taxes. Let's put that up on the board. 70 billion. That's 70. A billion is a lot more zeros, right? That's 100 million. That's 100,000. That's 100. Out of $70 billion, the tax rate was 6.9%. History is replete with these examples of the complicated nature of the tax code actually screwing normal people at the expense of big companies. For example, in 2020, FedEx reported $1.2 billion in pre-tax income. However, they paid $0 in federal income tax and received a $230 million tax refund. Nike had a $2.9 billion pre-tax profit in the same year and ended up getting a $1.9 million tax rebate. The only reason these things happen is because of the complexity of the tax code. And the bottom line is, none of it would ever happen if people really understood the tax code better, because then they would be much more informed voters, which would change the demographics of how we're taxed, how those taxes are distributed, and why it feels like you're getting so freaking screwed, which you are. The progressive tax code has become a swamp of liars and thieves, because the people who have the money to navigate 70,000 pages of regulations pay good accountants to do whatever they want done. My old boss used to say, "What will a good accountant get your taxes to be?" Whatever you want them to be. That's the type of people that are running all of the big financial decisions. There is no way that a 7,000 page tax code with 62,000 pages of addendum is meant for someone who's working 12 hours a day at a steel mill to understand. It's the exact opposite. My goal with this video is to introduce you to the progressive tax and help you understand how it works, so that in future videos we can talk about all of the ways that the progressive tax is being used, not the way it was intended, but being used in the exact opposite way, to take advantage of people who do not have the time, energy, and money to swim through 70,000 pages of shit. Let's jump into it. The fundamentals. If you ever want to know you're talking to someone who's a tax ignoramus and a horrific ego monster to boot, they're going to say something at a party that sounds a lot like this. They're going to say, "Well, I would earn more money, but then I have to pay so much more in taxes," right? There's two problems with that. Number one, it's not accurate. It's not accurate at all based on the way the tax code works. And number two, what an asshole. Like, what an asshole. I just cannot get over these ego monsters who just run the whole country and act like because they caught luck or lightning in a bottle at the right moment that they're masters of the universe and answer to no one. It bothers me in a very real way. So let's go through this. We're going to use an example of someone who earns $150,000 a year. The first thing you have to understand when you're talking about someone who's making $150,000 a year is that no one pays taxes on the first $29,000. That is what is called the standard deduction. The standard deduction is basically saying to the IRS, "Hey, I lived here. I don't think I have a ton of like crap that I've got to itemize. I don't have business write-offs and deductions. I don't have vehicles that I'm depreciating. I've got my house, but I just don't have that much that complicated stuff." Prior to 2018, it said that about 70% of all filers claimed the standard deduction. But after Trump's last tax bill, the 2018 TCJA, onward, that number has gone up to about 87 to 90%. Now, the reason for that is this TCJA actually eliminated a lot of things that used to be deductions, and they aren't anymore. The standard deduction is a really important number. Now, I'm going to say $29,000. Actually, it's not. It just went up. The standard deduction for single people filing single is 15 grand. The standard deduction for married filing jointly is 30 grand. I'm not going to keep going back and forth between single filing single, married filing jointly, and head of household. I'm not going to jump through all of that. The truth is, these tables change a little bit depending on who you are and what situation you're in. I'm going to talk specifically about married filing jointly because that's what I am. It's what I have the most experience with. And if you want to understand your specific situation a little bit, just go and look up the tax tables and everything I say applies. It's just the numbers change a little bit. So most people take the standard deduction. As far as we're concerned right here, right now, we are going to say the standard deduction is $30,000. If you're not going to take the standard deduction, the most common itemized deductions for just a normal person, that's going to be state and local taxes, which has just popped up in the news again with the new big beautiful bill. Mortgage interest, charitable contributions, medical and dental, gambling losses are actually a really common deduction. But if you're looking at your world and saying, well, I'm only allowed mortgage interest deduction on the first $750,000 of my mortgage, I'm not in a really high state and local tax state, $29,000 usually covers it. And because the TCJA eliminated a lot of other things that have been historical deductions, it just didn't give people the ability to add up to more than the standard deduction in most cases. Now, Mitt Romney blew his campaign to pieces because there was like a sneaked video where he was talking to a group of rich people and basically saying, hey, tax policy doesn't drive votes because 47% of the people in the US don't pay federal income tax.
Now, if you are new to the channel, let me give you a brief walkthrough of what we do. This is an entrepreneurship-based channel, but I try to share as much good knowledge as I can. My experience building between 17 and 30 companies, depending on how you count. If I was to start anywhere on the channel right now that you might think is interesting, I would actually start right here with Trump's Tariffs Explained. I own a bandage company. We manufacture in China and we import to the US. So the day after Liberation Day, I walked through all the intricacies of how Trump's tariffs would affect us importing from China. It's a really interesting video. It affects our product cost, building supply chains, how we price our product in the market, how those prices would have to adjust, how tariffs really express themselves for the normal consumer. I tried to even take it a little bit broader with my financial services background. I spent a decade in financial advice advising on like $300 million. I tried to even help understand how it's going to affect national security, foreign relations, looking back on how the first Trump tariffs worked over time. It was a really fun video. It was a really cool video and it got a ton of views for our channel. Plus, I think it's maybe the best video that I've seen from anyone explaining how tariffs work and how they're affecting the economy and why they're so nebulous to put your finger on. If you're ever interested in Turo, hey, this guy's going to explain kind of every single detail from the mind of someone who's started a bunch of businesses, not just one business, and from the mind of someone who's advised on a bunch of wealth, not just his own wealth, and who's, you know, grown a couple $1 million businesses, lost it all, grown it all, lost it all a couple of times. In this video, we discuss why gold isn't actually a very good retirement asset. It's become kind of US standard financial advice that, hey, if you're concerned about inflation, just buy gold. That's terrible retirement advice. I don't care what anyone says. My firm, Bedrock, has bought over 5,000 pieces of single-family residential real estate. We talk about why single-family residential real estate is fundamentally a better retirement asset than gold is in every way, shape, or form. That's actually those two videos. This one, we're rehabbing a $1 million property. We're putting about $1.5 million into it. We're letting people watch start to finish. This one's just some more financial advice. What if rates go down? What if I'm sitting on the sidelines waiting to get into the real estate market? One of our properties that we oversee for one of our Bedrock investors got shot 67 times. As you can see, the channel's not just this one thing you're watching. It's not just entrepreneurship, right? It's all the different aspects of 7 different companies that I own. It's different overlays of the decade I spent in financial advice, advising on over $300 million. This channel is me trying to give as much good information as I can for free to do some good in the world. If that interests you, please do like and subscribe. It helps in every way that we need to grow the channel, to get more good done out in the world. Thank you guys so much. With that being said, let's go back to the thing you clicked on.
Now, Mitt Romney blew his campaign to pieces because there was like a sneaked video where he was talking to a group of rich people and basically saying, hey, tax policy doesn't drive votes because 47% of the people in the US don't pay federal income tax. And that was just seen as this elitist asshole comment. But he was accurate. 47% of people in the US don't pay federal income tax. Like, federal income tax is only paid if you've got more than $30,000, if you've got more than $30,000 of income, right? And the poverty line right now is like $15,008. Like, a lot of people don't make more than $30,000, $40,000 of income. And then on top of this $30,000, you've got child tax credits and stuff. And so you've got a family, like, if you've got multiple dependents, the truth is the standard deduction is only the beginning. The truth is, if you've got other things that are coming in that are not part of the standard deduction, if you've got child tax credits or clean energy credits or any of that crap, that all comes on top. And so the bottom line is, he was accurate. About half of the US does not pay income taxes. Now, everyone in the comments is going to be like, dude, I don't make that much money, but I pay taxes because every single week they take money out of my check. And the truth is, that's not income tax. And we got to define some terms here really, really quickly, okay? The stuff that comes out of your check, there's number one, there can be withholdings. And number two, there's definitely going to be FICA and there's going to be Medicaid. Okay? So withholdings, FICA, Medicaid. Withholdings is money that is set aside to pay your income taxes. We will come back to that. And then FICA and Medicaid are money that's specifically going into the Social Security Treasury and going into Medicaid and Medicare Treasury. And so the truth of the matter is, people look at their checks and they say, well, there's all this money coming out for FICA and Medicaid. That's federal income tax. It's freaking not. It is freaking not. So a lot of people mix the two. They say, hey, I'm having all this money come out of my paycheck every single week. That's my taxes. No, Social Security, FICA, Medicaid, that is specifically going into specific federal programs, but it has nothing to do with the federal government as a whole, right? It has nothing to do with federal income tax. And that is, again, one of the freaking 70,000 pages of bullcrap that this has turned into, because people are like, man, I'm losing a lot of money to like Social Security, FICA, Medicaid. I'm losing a lot of money to that. But the truth is, that's not federal income tax. Federal income tax expresses this way after all of that is done. So let's go through it and let's talk through how federal income tax actually works, how the progressive tax table works, what it's designed to be, and what it has turned into. All right. The first $30,000 you earn is going to be your standard deduction. So we're not going to owe any taxes on that whatsoever. All right? The next, everything else that you have that you're earning, that is going to be taxed in brackets. This is a concept that no one does in anything else. There's no other area in life where your expense is based on a bracket, right? That I can think of. Not even March Madness is this style bracket. So the term brackets, like tax brackets, it's just a term that you only ever come in contact with January through April 15th of every year, and then you completely put it in the back of your head and you're like, that didn't make any sense at all. Because it doesn't make any sense at all. So with that being the case, there is a tax bracket for married filing jointly that says, on the money between $0 a year of income and $23,850 a year of income, you will pay 10% federal income tax on that money and that money alone. On the money between $23,850 and $96,950, you will pay 12% federal income tax on that money and that money alone. If you're making more than $96,000, the money between $96,950 and $206,700 on that money and that money alone, you will pay 22%. And it goes down the list. Right now, the U.S. tax system is 1, 2, 3, 4, 5, 6, 7 brackets. It has been way more than that. It has been way less than that. Right now, it is 7 brackets. Maximum federal income tax is on people making more than $751,600 a year. They pay 37% on federal income tax. Now, the way that it works is this guy, let's say this is his income. And let's say over here, there is left to tax. And then let's say right here, we have already taxed. All right, I redrew that so the lines would add up real nice. $150,000 of income. $30,000 is the standard deduction. There's 2 things we need to understand here. There is how much money is left to tax, like how much hasn't seen any taxation whatsoever. And that number is going to be $150,000 minus 30 grand, right? Minus 30 grand. And so we're going to say $120,000 of his money has not been taxed yet. Okay? Now, it's not 150 grand because he gets to say for the standard deduction, I didn't earn that money. Because apparently the U.S. has decided that $30,000 is the amount that it costs everyone to live in the good old U.S. of A., or at least the amount that they'll let us all say, hey, that amount, we're not going to pay any federal income taxes because we got to live on some money, right? That's the standard deduction. That's the rationale behind the standard deduction. It's like, hey, it costs everyone something to live. We're just going to let everyone have the first $30,000, married filing jointly, for free, right? So with that being the case, he still has to pay taxes on $120,000. This over here is $23,850. The first $23,850, or the amount that's taxable in that bracket, needs to be taxed at 10%, right? So at 10%, he's going to be taxed at $23,850 because he had 120 grand that needs to get taxed, right? So he's going to be taxed on $23,850. So he's going to write a 10% check on that number, or $2,385. That is his actual tax burden, right? That's his tax burden. That's how much he owes in taxes, right? And then we're going to have to subtract out this number. That means he has to still pay taxes on $96,150. That is his amount of money that still needs to be taxed. Now, he's paid taxes on his first $23,850 because that's the amount of money that's in the 10% bracket, right? Now, 96 grand still needs to be taxed. And so we come to this number. Any income he had reported as taxable income over $23,850, but less than $96,950, for gosh sakes. Why? Why? Why can't this be 25 grand? Why can't that be 100 grand? Why can't that be 200 grand, 400 grand, 500 grand, 750 grand? Why? Is it because they stumbled into these numbers kind of ass backwards and they're like, oh, we can't possibly make this, so you can actually do the math in your head? Why does it have to express out at like $23,850 or freaking A? Like, all of these numbers are idiotic. The reason is they set numbers and they just increase them willy-nilly, or increase them on cost of living, or increase them all over the place, and they cost of living adjustment. They set these numbers and then they don't bother making them simple, understandable, and navigatable. And because of that, it becomes this morass of complicated that people just give up on. And when people give up on understanding their taxes, they stop voting based on tax policy. When people give up on their understanding their taxes, they start letting, all these special interests just jam a million loopholes into the tax code, right? When people don't understand the tax policy, they can't fight back against special interests, and really it becomes a sea of thieves just taking more and more and more and more. And so the more power they get, the more money they get, the more they're able to just co-opt the government. It's called government capture, right? They just take more and more power. They twist the system more and more to their benefit, and people who are working 12 hours a day in a freaking steel mill don't have the time and attention or the money to fight back against the thing getting twisted against them for their entire lives. There are reasons why the tax policy feels so broken and feels so unfair. It's because it is. You're all getting screwed out there. This is broken on purpose. It's intentionally complicated on purpose. Some of the best minds of our generation are spending their entire lives as accountants in Deloitte and PricewaterhouseCoopers and these enormous accounting firms, not doing constructive damn work that's actually furthering any industry in a way that makes sense. They're navigating a 70,000-page tax code for their entire careers, because we made the tax code so complicated. This is stupid on a federal level. This is stupid on a US level. And the reason it's allowed to be so stupid is because it is so complicated. It's broken. It is being used as a weapon because people don't understand it. So the purpose right here is at least let's start communicating on how it's functioning and how broken it is, so that we can not have it weaponized against everyone because they don't have time to understand it. The next tax bracket, the next $23,850, the dollars between $23,850 to $96,950. That money, and that money only, is taxed at 12%. So now we got to do 12% on the money in that bracket, the amount of money in there, which is $73,001. I did this math earlier, all right? So at 12%, that's going to work out to $8,772 in taxes. So this person has paid $23,000 of tax. This person has paid taxes on $23,000 of their income and $73,000 of their income, and they had a deduction when they started for $30,000. So they only needed to be taxed on 120 grand. They have now been taxed through these two brackets on $96,950. And then the money that's left drops into this bracket. So we need to do that math. We need to say out of $120,000, he's already been taxed on $96,950. So the difference, the amount of money left here really matters. So he still needs to be taxed on $23,050, right? Now this bracket expresses that from $96,000 of taxable income, $96,950 to $206,700, the money in that bracket is going to be taxed at 22%. And so they're saying, hey, if you've got another $109,000, that $109,000 is going to be taxed at 50%. But this guy doesn't, all right? This guy had $150,000 of income. He claimed $30,000 standard deduction. That put him at $120,000 of taxable income in this simplified example, right? Then he paid the first $23,000, he paid 10%, $2,300. The second $73,000, like the next big chunk of money, the next bracket, he paid $73,000 at 12%, so it was $8,700. And then he had paid taxes, he'd paid taxes, he still has $23,000 left. That $23,000 is going to fall into this bracket, but it's not going to fill up that bracket. He's not going to pay taxes on $109,000 because he doesn't have $109,000 of taxable income left. Okay? It's really important to understand that, just because there's a bracket doesn't mean you pay the whole thing, right? He's going to fall into the bracket, he's going to pay some taxes, and then he's going to be done. All right? So at this, he's going to pay 22% of that number, which means he owes the federal government $5,070. That means all in, his tax burden is $2,300 plus $8,700 plus $5,000. So this guy is going to pay, so that means that this guy has paid $2,300 at the 10% bracket, $8,700 at the 12% bracket, and $5,070 at the 22% bracket. That means he paid $16,227. And this is where we get to really important stuff. There are two terms that fundamentally matter in this. And those two terms people just don't, it's not common. Don't feel bad about this, guys. Don't feel bad about this. No one taught this. I was in school K through 12 like anyone. I graduated Western North Carolina. I graduated just south of Asheville, North Carolina. I've built 30 companies. I spent 6 years in college, and no one ever talked in depth about this. Now, maybe there was a class at some point, but if there was a class at some point, it wasn't important to me at that point because I wasn't paying taxes. And so what I know is no one is ever taking a class when they're paying taxes on how the tax code works. That's just not how it works. So don't feel bad about this. Please like and subscribe so we can grow the channel and try to help more people. Try to get more of this information out. This is crazy. All right, so with that being the case, here is where we end up with two terms that really matter. Marginal tax rate versus effective tax rate. That's where the devil is in these details. Marginal tax rate means the highest tax rate you were in where you ever paid your taxes. So for this example, he paid taxes at 10%, he paid taxes at 12%, he paid taxes at 22%. 22% is his highest tax rate. Effective tax rate is your total tax liability, everything you paid, divided by your total income. And so we get to that by saying 16,000 divided by 150,000. If we do the math on that, then we come out to an effective tax rate of 10.82%. Now that's a problem in two ways. Number one, your accountant is able to act like a hero even though he didn't do anything. And that kind of perpetuates the system of having to have accountants file our taxes forever, right? Your accountant is going to be like, well, you would have paid 22% in taxes, but because of the magic of accounting, because of my magic here at H&R Block, right? The magic that I sprinkled on your thing, I got you down to 10.82. Okay, he didn't do anything. You just filed your taxes. He charged you $450 to file your taxes, right? I have an accountant that I quite like. I spend thousands of dollars a year on my accountant. But the truth of the matter is, it is dealing with a problem that we have created for ourselves, by ourselves. And if you mess up on your accounting, here's a little secret. The standard of proof for tax crime, right? The standard of proof for tax indictments is guilty until proven innocent. The biggest problem is in civil tax matters, we're not talking criminal, but if the IRS says you've underpaid your taxes, in the US we have effectively a you are guilty until you prove yourself innocent burden of proof, which is the exact opposite of every other area of US law. Nowhere are you presumed to be in the wrong. But if the IRS says you're in the wrong, all courts have upheld that you will be assumed to be in the wrong until you find the evidence and prove the IRS wrong at your expense. So if the IRS says, hey, you owe us an extra $50,000, you have to prove to the IRS and to whatever court you're working with that you actually don't owe that $50,000. You have to pay your accountant, you have to go through their system, you have to work with them, you have to provide bank records, you have to put forth all of the evidence to say, hey, I actually don't owe this money. In civil taxation in the US, the burden of proof is effectively the opposite of everything else. Everything else is, hey, beyond a reasonable doubt, you're innocent until proven guilty. When it comes to civil IRS matters, you are guilty until proven innocent. And it's your job to provide all the documentation. They can say you're guilty and you've got to provide all the documentation. That is a huge thing when we're talking about people who don't understand the tax code. And when the tax code is 70,000 pages long. Now, when I was in financial advice, I lived in Salt Lake City. And Salt Lake City is really close to a little town called Ogden. And Ogden is one of the big hubs of IRS audits in the world, right? Tons of accountants go to Ogden to work for the IRS. And in my financial advice history, once upon a time, I was sitting across a big desk from a husband and wife pair who were both IRS auditors working in the Ogden office. And they sat down, I was like, well, what do you guys do? And they're like, we work for the IRS. I was like, okay, cool. How can I help you? And we started chatting a little bit, and I'm like, well, what do you do for the IRS? And they're like, well, we're both auditors. I'm like, oh gosh, 2 IRS auditors. This is the worst meeting ever. This is awful. And I was just like, I'm gonna be honest with you guys. Like, I am terrified of the IRS. Not because I'm doing anything wrong, because the tax code's so enormous. And like, I don't know, like who really has the time to make sure they're complying with a 70,000 page tax code? And the guy looked at me straight in the face. He's like, oh, you're right. He's like, you're right. You have every reason to be terrified. He says, if we want you, we'll get you. I was like, no, wait a second. Like, I was just screwing with you guys. And he's like, no, if we want you, we'll get you. He's like, there's no way to comply with a 70,000 page tax code. And if you're doing complicated stuff, and if you're running businesses, and if you're doing a lot, and we decide you're guilty, we're going to get you. I was like, okay, that didn't help me at all. Like, this didn't help me at all. You didn't take my fear down one bit. But that's the bottom line. When you're talking about 70,000 page tax code and guilty until you prove yourself innocent when it comes to tax liability, then this stuff really starts to freaking matter, right? Like, hey, am I doing this right? I'm going to go back to my ego monster, all right? Cocktail party ego monster. Well, I would make more, but I just have to pay more in taxes. So I've decided to, take it easy, spend some time on my boat, right? That guy. We've all met that guy. He's amazing. In the real estate investment space, I've met that guy. So, I would make more, but I don't want to pay more in taxes. What he's implying, and this is the way you know he's a real estate, or that's the way you know he's a tax ignoramus who actually isn't all that bright. What he's saying is, I make $394,000. And if I make any more, it's going to bump me into the next tax bracket. And in his head, he thinks if I bump into the next tax bracket, then I'm going to pay 32% on all my money, right? All my money is going to bump into the next tax bracket, and then all of a sudden it's like, well, I would earn more, but like it's just going to bump me into the next tax bracket, and then I'm going to owe 32% on everything. He thinks that when you earn money, if you stop at 23,000, you pay 10%. If you stop at 96,000 or below, you pay 12% on all of it. If you stop at 206,000 or below, you just pay 22% on all of it. He thinks that however much money you get, that's the bracket that all your money is taxed at. And that's categorically wrong. That's the reason there's a marginal rate, the highest bracket I was in, and then the effective rate. Because some of your money's taxed at 10%, some of your money's taxed at 12%, some of your money's taxed at 22%, some of your money's taxed at 24%, some of your money's taxed at 32%, ego monster. So what he's really should be saying is, hey, I'm making $400,000 a year. That's great money for me. And in my world, it's not worth working anymore. If every dollar I make, 32% of that's gonna go to the federal government. I was okay paying 24% on the dollars I've made to this point, but working more so that 32% goes to the federal government, I'm only gonna hold on to 68%. On those extra dollars, that extra work, 32% of that is gonna go to the federal government. That's the way you know people don't understand tax law, because I think before this presentation, most of you agreed with that sentiment. Hey, I would make more, but then I'd have to pay more in taxes. Yes, on those dollars you would. What Ego Monster is actually probably saying is, I've got everything I want in my life, financially speaking, and I'm using taxes as an excuse for the fact that my business is as big as I need it to be. For them to be happy, right? Like, what Ego Monster is really saying is, check out how much money I've got. Check how much money I earned. It's so easy for me to earn money. I beat this game so bad. The rest of you who are struggling are so stupid, and I am so amazing at this, that taxes is the only reason why I wouldn't just have even more money. Taxes is the reason, right? But he's using an incorrect assumption of how taxes work to make this egotistical, heinous point, where really he's limited in some way, or he's got enough money. Congratulations. To salute, right? Good for you, man. Don't be obnoxious about it. People are working out there. People are struggling out there. Like, don't be obnoxious about it. Anyways, so with that being the case, the marginal tax rate is 22%. The effective tax rate is 10.8%, like the average you pay. Now let's change the numbers slightly. Let's take this up to a higher earner so we can see how it expresses a little bit farther, and then we're going to change and start talking about how deductions affect this.
All right, as I am editing that and making sure it makes sense and making sure my math is right, I realize it's 37 minutes long. And that is well enough for one video on YouTube. So what I'm gonna do is I'm gonna put that one up as a part one, and then I'm gonna do a separate video where we throw some more examples through this, because I think more examples would help, but they don't make necessarily the point of like how the progressive tax table works in the USA. So I'm gonna do this in 2, maybe 3 parts where we talk about, you know, this one is the progressive tax table, the next one is gonna be examples of how taxation works at different income levels, and the one after that is going to be why it has become a swamp of liars and thieves, and why it is so fundamentally broken, and what can maybe be done about that. Hopefully you enjoy this one. Stay tuned for the next 2 in this series. It's gonna take a bit. I appreciate you guys. If you have not liked and subscribed, but you're enjoying the content, please do. Love you guys. Thanks for being a part of this. Have a good day.